Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with your European Session Morning Outlook. And we'll start with the North American markets. The durable goods orders were 1.7% worse than expected at negative 2.2%. And the ex-transportation were 0.3% worse than expected at negative 0.3%. The dollar soared this past week in the fracas that resulted from the market realizing the UK had voted to leave the EU. In fact, the dollar index enjoyed its largest single-day rally since the crisis era back to December 2008 at 2.1%. Now, rate expectations have collapsed after Brexit, with the market pricing in a 11% probability of a rate cut in December. Deepening risk aversion and a concentration of reserves can provide a strong drive for the US dollar. The Dow Jones ended 60 points down on Friday, the Nasdaq 210 points. The Dixie came slightly down to 96.03 from 96.29. And the USD Canadian dollar, it ended 170 pips up. USD Swiss franc 90 pips up, and USD JPY, biggest mover, 280 pips down, over 600 pip downward range. All right, for today, we have the bank's stress test information coming out in the US. We'll also have market services PMI, market PMI composite, Dallas Fed Manufacturing Business Index as well. And in the week from the US, the most important event will be on Friday, the ISM Manufacturing PMI. In Canada, there's no Tier 1 events for this week. All right, on to the European markets. The European Union now needs to answer a lot of questions, and they must do it quickly as the uncertainty around the answers to these questions means fresh volatility for the euro. The Spanish elections results on Sunday are a promising vote of confidence from the Eurozone's fourth largest economy. While the market showed some initial excitement from the election result, the euro was not able to sustain any notable gains. The euro USD ended 250 pips down on Friday. Later today, ECB President Mario Draghi will be having a speech. We can expect to hear much important information from him regarding how the ECB is going to react to the situation which has come up. On Thursday, we will be expecting the Eurozone's CPI data and results from the monetary policy meeting accounts. All right, on to the most important markets for now, the UK markets. The fallout after the shocking Brexit vote on Friday continues to ripple through the global market. While investors are still in shock, the sterling continues its downward slide in the beginning of the Asian session, opening with major gaps all across the board. After free fall on Friday, many believe that this is only the beginning of a downward spiral for the British currency. On Friday, David Cameron announced that he is stepping down but will remain as acting Prime Minister until the Tory party convention 3 months down the road. This was met with sharp comments by the EU leaders who called for the UK to start the separation procedures as soon as possible and not hold the EU hostage to inter-party quarrels. The Bank of England Governor Mark Carney announced that the Bank of England is ready to do everything necessary to combat the economic shock following the Brexit. The bank has sufficient liquidity, which we're talking billions of pounds, which it can pump in the UK economy. From here on, the future of the UK is also unclear. Nicola Sturgeon, the SNP leader, has commented that a new Scottish referendum is very possible since more than 60% of Scots voted to stay in the European Union. Scotland has asked to start immediate talks with the EU so it can assure its fast-track inclusion in the Union. If it separates from the UK, Northern Ireland is also considering a unification with the Republic of Ireland after it also voted predominantly to remain. The City of London may also ask to be declared as an autonomous city-state from the rest of the UK. So the FTSE 100 opened or closed 510 points, and there was a gap to the downside, and it retraced 255 points, and the 10-year gilt yields closed at 1.48% on Friday. The GBP USD 937 pips down, 1,425 pips range, opened with a 170 pips gap going sideways today. GBP JPY 1,310 pips down, 2,105 pips range, opened with a 230 pips gap, lost 140 pips today. GBP Australian dollar 1,070 pips down Friday, 1,370 pips range, opened with a 115 pips gap and is going sideways today. GBP Canadian dollar 930 pips down, 1,550 pips range, opened with a 220 pips gap. GBP New Zealand dollar 1,100 pips down on Friday, 1,450 pips range, opened with 103 pips gap and is going sideways today. GBP Swiss franc 765 pips down Friday, 1,225 pips range, open with a 145 pips gap. This week's events from the UK are the consumer credit for May, mortgage approvals for May, GfK consumer confidence for June, GDP year on year and quarter on quarter, and the market manufacturing PMI. Alright, on to the Asian and Pacific markets. China's government bonds rallied with 10-year yields erasing this year's advance as Britain's vote to leave the European Union spurred demand for haven assets, and the central bank stepped up injections of funds. China's Premier Li Keqiang said global uncertainties have increased after the UK's vote to leave the EU, and said his nation has ample tools to meet challenges facing the economy. Alright, for this week on Wednesday, we're going to have Japanese retail trade data, and on Thursday, Japanese industrial production data. And last sector for the day, the commodities. We had the Baker Hughes oil rig count. It fell for the first time in 3 weeks to 330. It's down with 7 rigs. Gold prices rallied to a 2-year high on Friday after a shock UK vote to exit EU sent investors to the safe haven asset. Oil prices fell on Friday but clawed back some overnight losses after the UK news. Crude prices held weaker in Asia on Monday as investors continued to show caution on the back of an unexpected outcome of a referendum last week. The S&P 500 index had a range of 102 points on Friday. It's down to 2,012 now. Gold had a range of $96 at $13.25 now. Silver had a range of $1 at $17.71 now. Crude oil had a $3 range down to $47.41, and natural gas is trading at $2.62 at the moment with a range of 7 cents. That was all for today. Thank you for the attention, and I will see you next time. Goodbye.